Yeah, so we've got few hours to NFP, and I just want to explain to you an important market principle. So the market has a rhythm, and that rhythm is measured in terms of volumes. This volume is brought by two ways. One is the generic market sessions, and then also within that market sessions, you have a collision of sessions. This is where you have more than two or three sessions working at the same time. They tend to engineer a lot of volumes, and that volumes is what we call the market rhythm. It determines our profitability. The second part of that is the fundamentals that come up in form of NFP, CPI, interest rates, and so many others. And then finally, also the presidency of a particular country. Say the Trump's markets are different from a Joe Biden's market or an Obama market. So when you factor in all these three factors here, you will understand that these ones here, they sponsor the rhythms in the markets, and that is where we make profits, volumes. So in the next few hours, we're going to have NFP, and I just want to explain to you how we can actually profit from NFP, and then also so that you also don't have to miss out or take funny trades. So this is non-farm payrolls coming up in the next few hours, maybe two or three. Now, this is one of those NFPs that I may not find a trade, but that is not to say that we don't know what we're doing. We've traded the previous NFPs and we've actually made money. So if you come to Throne Trades, you look for last week. This is gold July NFP possible movement. So predicted that correctly. You can just come and watch it here. This is the video. And then there was another NFP which we also predicted. This is gold possible NFP movement. So, and then you go down, you'll find the rest of the NFP. But this one here, it looks like this is one of those that we may not trade. But let's see why I'm saying we may not trade it. So in relation to the volume that I had said, I want you to notice something here. So this is the rhythm I was explaining about. So the market has a rhythm which is measured in volumes. That is the generic volumes engineered by market sessions. And then the fundamentals, they tend to sponsor volatility. The key part is this. If you can notice the periods in which they don't appear, you will prepare to trade well in the days that they do. So in explaining this, you need to understand exactly why understanding the rhythm of the market is going to be very important for you to make money. So the rhythm of the market goes like this. There is a weekly market rhythm, there is a monthly market rhythm, then there is a yearly market rhythm. So the weekly monthly rhythm can go like this. There are certain days in which you may not see volumes in the market. It could be a Monday, a Tuesday. So if you don't see it on a Monday through Tuesday, then definitely the volumes will be there on Wednesday and Thursday. If you don't see it on Wednesday and Thursday, it must be there on Friday. And if you don't on Friday, you will see it on Monday. That is the weekly market rhythm. And then there is another rhythm which happens in the period of the month. You can have a certain week with more volume than other weeks, especially the middle of the week after the first NFP, the market tends to smoothly run. The rhythm tends to be good and enjoyable. So you need to notice it. So that when we don't see it in the first week, you will definitely find it in the second or the third week. Or if you don't at all, you'll see it in the last week. That is the monthly market rhythm. And then the yearly market rhythm is in the quarters. There are certain quarters with a lot of volume. Then there are certain quarters which don't. So you need to understand, is it the first, the second, or the third with volume? So once you position this, you are already in tune with the market rhythm. Then you just factor in your fundamentals and technicals, and then you will be profitable. One of the reasons why traders are not profitable and consistent is because they missed out on this rhythm of the market. So the monthly candle has closed. Let me now break down gold for you in relation to the rhythms that I have already explained to you. So let me come to the monthly candle and I break it down for you. So the month has closed. Last month was one of our very most profitable month, and I've recorded everything here. And the proof of how profitable we are, every single trade that we used to pass the Profam, I sent it out to the guys in the group, Throne Trades Telegram. So that was a good month. Now, this month, we have to see how we can trade gold. So if you look at gold on the monthly candle, you have an all-time high that the market failed to reach. When the market reached here, it was resisted from further going up. From this resistance, we had seen a very big wick, and this wick has come to form a low here, which will act as our potential support. And then we have another low here, and finally we have another low here. So if you look at this, there must be a tendency for the market to either fill this wick to the upside or fill this to the downside. But the way things look now, because of this rejection, it looks like we may fill the wick to the downside first, but we don't have 100% assurances yet. So we want to go more to a lower time frame and understand that. So I'm not going to go to the weekly candle because the weekly candle has not yet closed. We have today as a Friday, we have about a few hours for the weekly candle to close. So I usually want to trade after the candle has closed. So that takes us straight to the daily. So on the daily, this is how it looks like, all right? So the daily candle, we've already marked this resistance area and all of that. So our focus is going to be on the last 2 days. Okay, so this is the day. Now, this is the day that gives us the indication, that gives us the confirmation, that gives us the pattern. So if you look at this, this is our price difference area. Now, if you don't know the concept of price difference, you just come to Throne Trades, and then you look at the first video on our YouTube. It explains price difference for you. Okay, it is all there. It's a very powerful concept that plays out well. So you will understand it there. So this is the price difference. Now, the difference between this high and then this low, it is here. And that is what we call our price difference. And that is where we're supposed to trade from. So you can see when market reached here, it immediately came back down and moved about from here to here. That is about 200 pips. So 260 pips, almost 300 pips. Now, when I come, since there is no more information I can do here, I can switch to the 4-hourly. So the 4-hourly, I need to also mark my price difference areas and all of that. So if I come here and I mark this, you will see this is our price difference, and this is where market actually reversed from. And then we have the daily price difference and then the 4-hourly price difference, which is here. Now with this, I know what to do in terms of trading. I know where I'm going to trade and I know where I'm not going to trade. So this is one of those NFPs which I said I may not trade it. And let me now explain why that is so. So the only place I would trade is if price is able to pull back into these highs, clears this daily high, and then comes back into this price difference, breaks back inside here. This is where I will trade. Because right now, there is a low here, and then there is a high here. So what the market is in the middle of these highs and lows. So I don't want to trade this. Because what can happen, price can push up weak and then come down, or just clear these lows and it's done. So all I'm going to do now when I come to the 1 hour is just to wait. I'm not going to do much, I'm going to wait because price is kind of in the middle now. I want price either here or it breaks this and then continues down. So if I don't see what I'm not expecting, I will not trade. So there's no need for me to bother because I just need to apply the rhythms. I understand the rhythms and all of that. So let's see how this really plays out. And just get notice of this principle here. It will elevate your trading massively.